The Australian dollar is set to remain a painful issue for large parts of the business community this year, with all the signs so far indicating it will track higher rather than lower. So will there be any relief as 2012 unfolds? Well, in the third part of our week-long series, our experts tell us where they see the Aussie dollar heading this year.
Well, our forecasts have the Aussie at parity with the US dollar at the end of 2012. Now, the Aussie dollar's performance has been one of the big surprises the last year or so. It's been amazingly resilient given the global backdrop. In fact, if I just flown in from Mars and you told me the global story and asked for a currency forecast, well, I probably would have said about 70 cents. Now, the Aussie's not immune to what is going on. We think it will drift from around 107 today down towards that parity level at the end of 2012.
I think it'll be around 90 cents. The key driver of the currency is really global growth in commodity prices. There are some other things that play a role, but that's the big picture thing that drives it. And I think we're going to see slower global growth, commodity prices come off, so I think the risks are the currency goes down, not up this year.
I'm picking at $1.07, just above parity. I think it's principally a story of the power proximity because China and Indonesia are demanding Australia's resources, and for that reason I think the dollar will be strong, and the rest of our fundamentals are closely tied to the emerging markets where, again, that's where most of global growth is going to come from.
Well, we think the Australian dollar, where commodity prices are currently around, will be good value at around about 101. So we have the Australian dollar by the end of the year around parity. I think it'll bounce up and down a bit in terms of weakness in essentially the US dollar because of quantitative easing being offset a little bit by further falls in commodity prices as we go forward.
We're looking for the Australian dollar to be around 1.05 against the US dollar at the end of the year. In the near term, with the RBA lowering the cash rate and some more weakness coming through in the global economy, we do think the Australian dollar could lose some of its recent strength, maybe even head down towards parity again. But again, over the course of the year, with the global economy stabilising, looking a little bit better, and the Australian economy looking a little bit better, we do expect the strong fundamentals of China growth, demand for AAA rated debt, which Australia has, is all going to help the Australian dollar remain reasonably high.
So the good news for exporters and import competing businesses is that 3 of our 4 experts see the dollar falling this year. The bad news is not by much. Tomorrow night our experts will be turning their attention to a key indicator of the health of the economy, and that's unemployment.